So maybe you've heard of whole life insurance or universal life insurance and the cash value that is associated with those insurances, and you're curious, you're interested, you want to know a little bit more, but you've got no idea where to start. Well, by the end of this video, you're going to have a much better idea of some of the ways that you can use a cash value life insurance policy to your benefit, to your advantage. My name is Jake Williams. I'm a life insurance specialist with Step Up Wealth Management. For more information on cash value life insurance or life insurance in general, or how all of those things fit together into a comprehensive financial plan, be sure to subscribe to my video and click the notification bell. That way you're notified immediately anytime I upload new videos. So I just did a video a couple days ago on is cash value life insurance right for you? And I broke down, okay, you got to worry about the cost and the complexity and all these other things. And you might be thinking, well, if it's that much, if I have that many things to worry about, why do I want this? Why do I want to look into a whole life policy or a universal life insurance policy? Well, there are some things that it can do for you that term life insurance just can't do. And that's the primary benefit. There's some other things that you can do with it that can be really cool if you're able to take advantage of it. But really, it's what can it do above and beyond what term life insurance does. And the first thing is the the permanence of the policy. A term life insurance policy, when you hit the end of the term, it's done. There's nothing else you can do. Some policies may have like a roll up feature where you can continue to pay more and more for the same amount of coverage. And, that can that can work. There are some instances where that is your best choice, but not often. So with these policies, with a whole life policy, you're paying that same premium for the term of your life. And as long as that premium has been paid, as long as there is cash value in the account, you have coverage. You have a death benefit. Universal life, it's a little bit different. You can be flexible on the premiums, and that can change how much coverage you have. But as long as, again, just like with whole life, as long as there is a value in the account, as long as you have cash value in the policy, you have coverage. Um, which that can be very nice if you're someone that you know you're worried about by the time you get to 70, 80 years old. Okay, you may not be able to get term life insurance coverage anymore, or the costs for term life insurance are going to be way above what you would have been paying before, so why not have the cash value associated with it as well now? um, Another benefit of a cash value life insurance policy is the cash value. So the permanent coverage is the first and biggest thing that you want to look at with a permanent policy, whether that is whole life or universal life. I use a lot of those interchangeably. So a cash value policy or a permanent policy, those are either whole life or universal life. Those are what I'm talking about. So you've got the permanence of the policy, which is a major benefit, but then you've also got the cash value. Um, how those cash values are determined and build and grow is going to vary depending on the policy. Some policies just use a straight interest rate. You get 3%, 4%, whatever your company, whatever that company works with, whatever you sign up for, that's the interest rate that you get. And it's just a compounded interest over time on the cash value that's in the policy. It's a nice way to build up a cash value, but it can take a little bit to get there. There are some other things out there as well. There is with universal life specifically, there are indexed universal life policies where you can tie the cash value growth to an index, like the uh, S&P 500, sorry, or the Russell 2000, or a couple of the indexes out there that you see. There's a lot of them out there. So if there's something you're interested in, there's probably an index to follow it. And it's just finding a policy that will work with that index is your next thing. There are also variable universal life policies where, with this cash value account, you have a securities account. Basically, it's almost a brokerage account where you can hold stocks, and the value of your policy would move with the value of the securities held in that separate account. But the complexity of that's where you sit down with a professional and you figure out, okay, what's right for me based on what I know, what I like, what I want to do with it. Do I need just a straight interest rate? Do I need an index? Do I need variable? That's up to you and whatever professional you're working with. If you've got questions on that, there's a link in the description where you can apply to become my client. I would love to help you out with that, but that's neither here nor there right now. Another benefit of these cash values associated with permanent life insurance is the basically forced savings that you have with it. To keep up with the coverage, you have to build this cash value. And, I like to spend money. Whether it's going out to dinner with my wife or the newest toy or whatever, you know, sometimes you get towards the end of a month or towards when you're waiting on your next paycheck and, not a whole lot left to put into savings. If you have a commitment where you are putting money into this policy specifically to maintain the policy, it can build that cash value alongside it and grow that savings. So it's basically a forced savings. Um, and some things that you can use that cash value for. Um, you can take a loan from that cash value if you've got something that you need to cover. It is a loan, so you need to pay it back. If you don't pay the loan back, yes, it is your money, but if you don't pay yourself back on that loan, you're reducing the benefit of your coverage. You're reducing the death benefit. And now there are things that you can do with that and around that. And if you're aware of it, that's fine. But you need to make sure that this isn't just free money. It is reducing the death benefit of your life insurance. If you know that, you're aware of that, and you've accounted for it, there are some really cool things you can do with it, like using it as a source of tax advantaged income in your retirement. If you fund a permanent life insurance policy with a cash value and you fund it enough that it has built up a significant cash value, you can take that money in retirement. And if it's the money that you've put in and you're not taking the growth out of the policy, that's entirely tax free under current tax law. Um, if you're starting to take some of the growth off of the policy, you can start to pay some taxes on that, but it would still most likely be less than um, employment or income tax or anything like that. For that, you would need to sit down with a tax professional and go over all those. I don't go into tax law. I start seeing tax law and my eyes go crossed, and I just don't deal with tax law. um, I can help you with figuring out who to talk to and set you up in ways that will take advantage of it. But when you're trying to get into the exact details of it, that's just crazy. Um, if you're someone who does understand tax law, more power to you. So you can get the tax advantaged income in retirement. And then you can also use that cash value while you're still contributing, while you're still working. Um, there are ways where if you take a loan out of a cash value policy, instead of taking a loan from the bank, say for example you're going to buy a car, get a $40,000, a pickup truck or a nice car or whatever. You take that $40,000 loan out of your cash value of your life insurance policy. Yes, you still have to pay the loan back and you still have to pay interest. But instead of that interest and that balance going to a bank, that's going back to you. So yeah, you would have to build up the cash value to that point before you start doing these kinds of things. But if you can build up the cash value, you can do those kinds of things where you take a loan from yourself for a car. If you take the loan from yourself and from the cash value of your life insurance instead of from the bank, when you've paid the loan off, you still have the car, just like if you had taken the loan from the bank, but you also have all the cash that was paid on it and the interest that was growing on it. So that's a really cool thing, and there's a lot more to get into with that if you're interested in it. The concept is called infinite banking. There's information on it all over the place. I'm not someone who's uh, paid into the whole infinite banking universe, so I don't do a whole lot with that. But if you want to talk about the concepts, I can help you with that. So if you've heard of other uses of a cash value life insurance policy or other things about these cash value life insurance policies, and you know, if you've heard more, drop me a comment down below. I'd like to hear it. I like picking things up from you guys and figuring out what you guys are hearing. If you want to find out more information on these policies, you can check out some videos I've done, like just explaining whole life insurance or anything like that. And if you like the video or you want to find out more information or how these kinds of things can help you, there is a link in the description below where you can apply to become my client. Okay? I hope you got some good information out of this. If you want to know more, hit that link in the description. You got a masterclass in there, and then you can apply to become my client where we'll sit down one-on-one and figure out what works for you. And in the meantime, make sure to take care of your now, your future, and beyond.